In this section, we're going to talk about the next big thing, or probably, or maybe the next big thing in crypto, real world asset tokenization. What does that mean?
Yeah, so basically it means that you're putting real world assets on the blockchain. So I can give an example. So maybe the biggest in crypto right now, and people might have heard about stable coins.
Yeah.
So stable coins is essentially a tokenization, let's say, of the dollar. And why is that a good thing? And if you look today in crypto markets, there's many billions traded every day. It's probably the highest, some days even higher than Bitcoin in daily volume. You need dollars and to transact, like it's the dominating currency, for example. But by tokenizing it, you're making it more liquid and more easy. So if you were to make a bank transfer, takes 1-2 days, it's there. But if you use the tokenized version of it, it's almost instant, depending on what chain you are. So you can, the logistics of transferring dollars and buying on that exchange or going to another exchange is very easy in tokenized format. The same with gold. You have tokenized gold. Some cryptos are, or crypto tokens, tokenized gold. Much easier to own, right? You have the counterparty risk there because you need to, whatever underlying, to trust that they hold the gold or it represents what it should represent. But it's much easier, you don't need to store it and so on. So that's the basic idea, just from a, let's say, liquidity logistic point of view. But even more interesting, and that's why, so we see a convergence, it's already started. You have really big markets in some tokenized real world assets. But this is expecting to spread to everything, to stocks. It's also already happening in real estate. And this opens up, and you're talking about like democratization of ownership. So for example, you can own a few basis points of a building. Mm-hmm. You can have exposure to art. Let's say there's a portfolio of Picassos and whatever, and then you can tokenize those holdings, and people can buy a small fraction of a Picasso.
But for people might think they can already do that.
Yeah.
Right. Securitization is always been. We have companies, right? You can structure the real estate portfolio in a company, and you can exchange the stocks, for example.
Yes.
And the stock trading, or like if it's private or public, has been working for years, right? For thousands of years. So what does this solve, or how does it become better?
Yeah, but the way is it's much higher barriers, right? Many of these companies are private, first of all, so persons can't even access it. Like you are pooling assets in a private vehicle. You might have some public, but it's still cumbersome to trade them. This, by tokenizing, first of all, you're also opening up a 24/7 type of market, right? Mm-hmm. So even more liquidity, you could argue, because it will always go, there's a token that always will be trading. And the flexibility of how you parcel up or how much you buy is much easier. It's more of the administration of it. It takes away a lot of the admin. It makes it much easier, much easier.
That's the benefit.
Yeah.
The really not the between buyer and seller transaction themselves. Well, a little bit there as well, but everything around to make it safe, make it permanent. That the transaction
easier
is
and fast and all that.
Through.
Yeah.
That's where the value is then.
There's a great value in there, and many people believe, as does BlackRock and like the biggest, what will be trading in the future is tokenized versions of real-world assets.
And in a big scale, I can imagine probably like mutual funds, and maybe even in a hedge fund that has incoming and outgoing flow, and you just net it out.
Yeah.
Also when I was a derivatives broker, what we had there, what we really made the money on was internal float. So we had 800 million long, $1 billion short. Our net position was what we had to go to the market with and do something with, because the rest was covered by the customers and internal float, and then you get the spread on both. It's beautiful.
Yeah.
That's where you make the money. And maybe this is the same way with the stable coins that works. The inflow and outflow is only what needs to be, or the net inflow outflow is what needs to be corrected. The rest is just an effective exchange, right?
Yeah,
Do I
yeah.
understand it correctly?
Yeah, like an offsetting. Yeah.
Offsetting, that's the right word.
Yeah, yeah.
Offsetting.
But the thing is here, it's like the transparency of it, and you actually mentioned that earlier. If you tokenize bonds, and that's something that goes like the tokenization of treasury type of instrument, bonds, money market instruments, already starting in crypto. It's very cumbersome in the hedge fund. The settlement T plus whatever. It's opaque. You don't know who owns what. But here we have a chance by tokenizing that you have if you want to. But that kind of system would be appealing. You can have a fully transparent ledger. There's no question about what the ownership is at any point in time. That's a really good thing. So it's gonna clean up a lot of these inefficiencies in a way that I think is revolutionary. And I think most assets will be on a blockchain in some shape or form in the future.
Yeah, that's interesting. What we talked about just before pressing the record was actually the bonds there, and a good friend of mine been talking about the issue, not necessarily putting on the blockchain, but the issue itself. In Norway, we have something called the VPS, Verdipapirsentralen, which is holder of the stocks. And they have something similar in Sweden, but it has a different name.
Yep.
So you're centralized, it's transparent who owns what, everything. It's a big database from the old days that are still living, right? But you don't have anything similar for bonds. And one thing is with exchange traded, or nothing is exchange traded, but the big ones going through brokers. But you have also the smaller ones that are only peer-to-peer traded bonds. And you have no really transparency, you don't know anything, and you have an edge in the market just by having access. Just by having access to the bonds, you have an edge. Boom, you can make money.
Yeah.
And that feels like an outdated edge to have.
Yeah.
In some sort. It's real, but it's kind of like, are we still there?
Yeah.
And maybe with the blockchain tokenization, you could have full transparency. Who owns what? It's available to anybody who probably will some regulatory criteria, but everybody who fills that,
yes,
you can trade it.
You can, and it's going to be interesting how it evolves. Of course, it's in the interest for some parties not to have that transparency.
Yeah.
And if you're a big player, it goes, in TradFi even today, you might have a more complete image of the flows that are going on and where the market is heading next than the average person. But I think the ambition should be to make it fully transparent for everyone, if like equal market participation.
Yeah. I know real estate has been talked about a while for to put it on the blockchain, and this really, how I view blockchain is really a bookkeeping system. Yeah. That's the sense of it in my view.
Immutable. I mean, depending on what chain you're looking at, but immutable bookkeeping, a bookkeeping system that's transparent and that you can trust, and that's like timely, more like real time updating.
And how would this affect the cryptocurrencies?
I think it won't affect the cryptocurrency per se. I think cryptocurrency and blockchain enables this rather, and that's where the pure, let's say, technological. There's a lot of speculation in cryptocurrency, but here the underlying technology, that's the power of it basically, that enables this for real market, for all markets basically.
And maybe then some of the trading would shift. What we see in like meme coins and this really, in my view, I mean, it's strange that it exists.
Yeah.
That it's really fascinating, and like from a social anthropological point of view, like,
yes,
does this exist? And the amount of market cap and money moving, I can't be anything else than fascinated. Like, it's there. But maybe, you know, if you have tokenization, real world assets, the adaptation or the it doesn't have to be an abstract thing that you trade.
Yeah.
It has something value, and you probably get some bubble tendencies there as well, like we always had in history, you know, from occasion, like on this field and that field.
No, for sure, but it is no. It's gonna. I see it as it's real world assets being traded. It's just a different representation. It's a tokenization of real world assets, which makes it more transparent, faster, better in every sense, I think.
Are there any real world assets that you can come of that doesn't make sense to have on a?
It's a good question. I mean, there are naturally protected real world assets for security reasons and stuff that shouldn't be traded. You might argue, I guess, you know, anything restricted. You can talk about arms. You can talk about uranium. There is a market for uranium and so on. The question is, should those kind of assets be on a blockchain? I don't think so. If it's probably going to be on a blockchain, but private networks where only certain operators can access it. But in general, I would say no. I can see no reason why, you know, you have regulated functioning markets, and it's sort of the rails of those markets are blockchains, no matter what, in general, I think.
So really where transparency is not wanted for security reasons,
you can have a private blockchain.
Then you could have a private.
Yeah. Which where only few participants, heavily regulated participants, they have access to it, but no one else. And so
but then again, would they, if it's a small group, would they even need a blockchain?
It's more for the admin and audit that comes around, because it's heavily regulated by default, which means there's a lot of checks and balances which are now done in heavily back office functions, even for uranium and all licenses, whatnot. All of that just being streamlined by being in a blockchain.
Yeah.
Any time a new license is renewed or a new approved counterparty enters, it's all updated in this ledger. So I think even there.
But many would probably argue.
But we're not there yet. I mean, just to. But I think that's where it's going. Yeah.
I remember under the NFT craze.
Yeah.
Right. People were talking about put your house in a smart contract. And since you renovated it, you want to take a fee for every time it's sold. So this was a big deal, right?
Yeah.
Or some of the big things that artists could now put their art in as an NFT.
Yeah.
And does make money when it's been sold each time and stuff like that. But then that begs the question, then you put your house in, and when the next guy sells the house that you used to own, then you take a cut.
Yeah.
It would be strange. And then, here comes the whole point, what about people don't honoring it, right? Okay, you can have your blockchain, you can do whatever you want. Still, it's this is mine. I just don't honor the system.
Yeah, but I think, you know, in terms of anything software like NFTs, right? The ownership is either you buy it and you get it, or you don't get it. But I think it's going to be the same, and that's where the legal framework, right? So if this is the way we actually buy and sell houses, the one that actually can show the private key, let's say, for that house is the owner. And that can be verified. And if you sell your house, that private key will not be transferred or will not be generated until you have received payment for it and so on. So I think those really kind of issues will be solved. Yeah.
So it's really the regulatory to get it in and to use this framework as the highest form of proof.
So it's exactly, and that it can be enforceable in law. I mean, it's basically the way how things works. In transactions.
Some way I started to think about. I remember being a derivatives broker that the oil price went in negative. You remember that when that happened?
Yeah.
It was crazy. It was crazy. And the issue there for the listeners was that the oil delivery in the US, so you buy the WTI contracts, you take delivery. It's not the cash settlement.
Yeah.
You take deliveries. You need to. So if you own the contract at the expiry,
Yeah.
you receive oil.
Yeah.
So yeah, and the issue was there was no place to store the oil.
Yeah.
That was the crazy part. So the oil tanker came in. Okay, hello, here you go, Mr. Johnson. Here's your oil.
Yeah.
Where do you want it?
Yeah.
And it's not like you can just put it in my truck for like buckets of. It's
No.
much more, right?
Yeah.
It's barrels and thousands of barrels of oil. So then a frenzy started, and everybody started selling the contract to somebody that could take delivery.
Yeah.
And hence the price went into negative. So people paid to get rid of, so you don't, because it couldn't take delivery. And in a setting like that, I don't know why my mind drifted through towards that, but in commodities, I can imagine that blockchain could be in futures, right? In standardized commodities, could be really beneficial when an oil tanker sets off.
Yeah.
These contracts are sold thousands of times back and forth. And when the oil tanker arrives, that's when you take it.
It sort of settles.
It's sort of settlement and the delivery. And there's a lot of admin going into that from some broker until somebody takes the delivery. It's a lot of hands touching the deal indirectly or stuff like that. It could be streamlined so much more.
It could, and you can monitor it, which some do already. Maybe where all the tankers are, where is the oil? It's all that enormous streamlining. I remember that someone asked the question. It shouldn't be named WTI. It should be named WTF when the price went negative. It's no, for sure. Even let's say Amazon and other logistics chains on a blockchain, and there's lots of pilot cases being tested, have been for several years, but just having each checkpoint put on a completely transparent ledger every that's a good thing, and we will see it in medical records, everything more or less. But private, I mean, some of this information is sensitive. Even Amazon, you may not want other people to know what you have been ordering, but they could provide for their customers a complete. So your part of the ledger could be completely transparent to you.
That's a very interesting point. Like GDPR in all of this, you don't want full transparency. You can't have legally. You can't have full transparency. That's too much of a privacy concern. But that could be then solved with the company is using internally blockchain to keep track and only show what's needed for.
So your key will only show items relevant to you. But no one else.
And also like sort of things like service history on a car, for example. Changes hands, everything. And it's on older cars. It's a little bit unsure how was it really. You have some records, but you're probably missing some, or you hope it was done some a little bit more service on the car, maybe. But you don't know. And even in setting like that, it could be a good way to retrieve history. And find history, and it's verifiable then.
And these zero knowledge proofs that they actually can verify certain things without revealing all of the things, like a medical record that you become ill in Thailand or somewhere else, that they actually can access and trust the information of that record without necessarily getting all of the information, but they can get and things like that. I think globally a lot of things can be sort of cleaned up and made much more efficient.
But we see a lot of like top of our heads, we're just shooting ideas now, and this field, that field, it's a lot of fields, and our main argument here is we see efficiency to be made. But what would be the cost? What would what would the world need to be able to run a system like in all sorts of things like this?
I think there's a lot to be done on the legislation side. Crypto markets, if you look today, is sort of loosely regulated. There are certain things you can't do and so on. But let's say DeFi, for example, you can trade, it works fine. You can, but here we need societies to accept when there's like the bigger systems and systems that will talk between countries and so on, that they accept that this is the way it's being done. We need standards. But then, the administration muscles will be enormous and a lot of things will be governed by smart contracts and so on. But because even if you come up with this chain that's really good, let's say medical records, unless you get traction, first you might need to get traction in Norway, right? Maybe all the hospitals in Norway, they need to accept and use it. It should be made a standard. And that's sort of a political regulatory thing. But once that happens, okay, should we have that type of chain running for EU and then globally and so on? And should different chains, American medical chains, talk like in a consistent way with European chains if we don't have one global chain and so on? But I think it will get there. It just will take time and a lot of legal work to be done.
Yeah, absolutely. It's a very futuristic topic in some sense, and with the rise of AI, maybe the cost here or the what needs to be solved really is the privacy part.
Yeah,
where you don't want full transparency.
Yeah,
you don't want that.
And that's important because there's so many. I mean, there's so many cases where you actually need and should have privacy. And we've seen it now, even if we're very transparent in Scandinavian countries, right? Yeah. Basically, you can go in and look up the salary of people.
Yeah.
If I talk to friends in the UK and US, they say that's bonkers, right? It's a security risk. If you were to talk to people in Russia or even, in Africa or wherever, no one would like to have there because it would just be a strong incentive to get your kids kidnapped or whatever. And I think those things will change even in depending on what the development is. But there's too much. One could argue that in some cases there's too much transparency, and certainly in some countries it would be way too much transparency. And in Venezuela, for example, it's a business model of kidnapping people. It's dystopian, right? But it's happening. And where the transparency we have in Scandinavia would be, a huge threat in countries like that.
But maybe the way to look at it is that we as users today have user accounts with our email often, many places. And it can be different emails. It doesn't have to be the same one, but we know the login and we know like as an individual, but the next guy doesn't know where you have a user account.
Yeah.
And I have access to all my knowledge today, but the others doesn't have necessarily access to and maybe that's some sort of that type of logic is the way to look at it, that the full transparency will go in my benefit as a user and not for other users to see every other user of each. So it's not necessarily back to the car history. It's not for me to check your car.
No.
Right? But you can show me when you want to sell the car.
Exactly. Then you get access to see that, okay, the provenance checks out and this is the history.
And that would be like the user accounts that we see today.
Yeah.
Exciting times.
Yeah.
Dang. Thank you so much.
Thank you.